First of all, once you don't have a process, you're very likely to fail. Once that process is not consistent and not objective, you cannot make money every single month.
Do you normally journal your trades?
I want to be super honest with the journaling and logging part. And I'm telling everyone who is starting off, this is mandatory. This is part of the business. This is part of your job of becoming a trader.
Does it really matter at the end of the day in terms of how profitable you are?
The platform itself doesn't determine whether you are a good trader or bad trader. What determines whether you're a good trader or bad trader is the skill. I use the best of both worlds. I call my strategy set and forget and get a life.
What are some of the common misconceptions you have heard about online Forex trading?
There's so many misconceptions. I don't even know where to start.
Good morning, Nairobi. Jesse here again with another episode of Bullish Banter. We have had quite a good weekend, I believe, and it just marks a continuation of a special guest we have had with us in Nairobi. Of course, my pleasure to introduce to you Bernd Skorupinski.
Oh, that was perfect.
How are you?
Very good. Thank you for the invite.
I know you landed when Nairobi was quite sunny.
Yes, thankfully, yeah.
Now you're finding the real Nairobi.
That looks good. The weather is perfect, yes.
It can change depending on how your mood is. Yeah?
Oh, my mood is perfect, so that's why the weather is good.
I want to believe you've enjoyed your stay around.
It's incredible. I cannot describe it in words. It's like really, for us Europeans, I said that before, we only see that in movies, like that way of Africa that I've experienced. It's incredible.
Interesting. Given it's only just May, December is still along the way, so you can make your way again. Yes.
I'll come back for sure, 100%. If you guys invite me again, I'm happy to come back anytime.
Yeah. On Saturday, I know we had a very nice session on the Trading Titans Summit.
Absolutely.
And I would like, of course, given we covered a lot of aspect of that, maybe we'll add a little bit of insights on this session. And on Bullish Banter, we talk as much as possible on fundamentals, but a bit of technicals that you can maybe for the trader can apply on themselves. And the first question, which I know everyone, when they Google your name, will come about is FTMO, and of course, your performance in there. Maybe I would deviate a bit from your, of course, the performance to maybe back when you were starting to trade. What was the most challenging period of your time that now shaped you to become this successful, continuous and sustainable trading at least?
So for me personally, I don't think I had a very a particular period that was super challenging, or at least I cannot remember. So my process basically was rather smooth, but also because I had proper mentors that teach me from the scratch. So I'm not self-taught. And I think the problem is that's why people feel it challenging, because they are self-taught through books, through YouTube. So they are trying to figure it out by themselves versus somebody who is getting taught by a real mentor and getting to know everything from A to Z in a proper process, right? Every step is explained in a proper process through a mentor versus somebody who doesn't even know what is A, what is B, what is C. And this is where the struggling is coming from. And I never felt that struggle, to be honest.
Interesting. I know, I believe you mentioned something earlier that you had to take some leaves just to, learn how to trade, just to attend a proper session on it.
Yes.
And given right now, back in the day, technology was not such advanced as right now. We have YouTube, we have live sessions.
There was no Zoom meetings.
Zoom, Teams, Google
yeah,
Meet.
exactly. Yeah, 12 years ago was different. Yeah.
Yes. How would you say trading education has evolved since your time to now? Is this like how you do it on the online trading academy and maybe how we do it at FXpress on the daily analysis? Is it still giving the same guidance and proper education to a beginner, or there's still some aspects maybe that we need to improve on with the...
No, so at our campus, basically at our online trading campus, nowadays, I mean, there are in-person events as well. So some people, they just learn better in person, like eye to eye, face to face, right? I feel like especially the older generation, they still prefer like the physical aspect of like education. But nowadays, really, as you said, the technology is so far advanced that most of our education, because we have students at Online Trading Campus worldwide, even from Australia, from South Latin America, even we have like students from Kenya, like a few of them. So and so technology is so far advanced that you don't actually feel the difference, whether it's like online or whether it's like physical in person, because it really feels like if I deliver a session online through like a proper Zoom meeting or whatever, it's like I'm sitting next to you. So technology now is so far advanced that you can literally do everything online.
That brings a very interesting point, yeah? Let's say I'm a beginner. I'll just have my MT5 or MT4 on my platform. Of course, trading view charts if I prefer it. Attend a Zoom session, of course, the beginner. What is a pip? What is a candlestick? Maybe what would you advise a beginner trader on some of the key metrics that even though you are attending it online, you can still maybe discipline yourself from your comfort of your home or workplace to make sure that it allows you, if you attended a class yesterday, you're able to still maintain the same knowledge you earned and execute it at least on your trading journey as you educate. What would be some of the key pointers just to keep you, not missing out had it been a physical session?
I mean, that's a good question. So just generally speaking, now again with online technology, for us, I can just say how it is for us at Online Trading Campus. Everything, all the sessions, all the live sessions are also recorded. Versus a physical session, you can hardly record it, right, and rewatch and come back to that session. So the good thing is with that technology, with like online education, everything is recorded and you can watch it as many times as you want until you fully understood the concept. And in general, for a beginner, it's just very important that you set yourself, what I believe and what I did for myself, kind of office hours. You understand? When I say, okay, now from, let's say, I come home after work let's say I come home at 6 p.m. And then maybe then I spend some time with my family and have dinner. And from 8 p.m. to 10 p.m. is my office hour. Please, nobody can disturb me. Family, kid, you go to bed. I'm just making this up, right? But you have to set yourself because when you start learning how to trade, you're starting your own business. It's a small business though, because you're just starting, but you're an entrepreneur. It's like basically your startup, right? Because you are about to make money at some point of time. So you have to set yourself in that mindset that you're starting a business, so you need proper office hours. And then you say, okay, my office hours are from 8 p.m. to 10 p.m. And this is where I need my peace, where I can focus fully on my education.
I think that makes sense. I normally, when I talk to clients, I take this as a business.
Yeah.
There are risks to it. There are liquidity risks, there are market risks, or operational. There are so many things. So I tend to think you should not really be bothered with a lot of informations, because I think, given your experience in this, there are a lot of abbreviations to different new words that you'll be learning every day.
Yes,
CPI, FOMC, and all these concepts. And I'm like, take it slow. Start with maybe a practice environment. Understand what you're getting yourself into. Maybe from your experience, what are some of the key factors you look into before you execute a trade or even maybe make an investment decision in the market?
So for me personally, well, in general, there's a process to everything. Like in any other job, there's a process to everything, and that process has to be consistent. Once you don't have a process, you're very likely to fail. Once that process is not consistent and not objective, you cannot make money every single month. So first of all, you need a process, and that process has to be consistent, and then you can slowly see basically that consistent income coming in. So for me personally, in a nutshell, right, I use the best of both worlds. I call it a two-step mechanical process where I look first at fundamentals, right? Maybe if we have time, we can a little bit dig deeper into what I consider fundamentals, but I go into fundamentals to get a bias in the market, whether I'm going to be bullish in that particular market, bearish, or neutral. If I'm neutral in that market, I'm staying completely away from that market because I don't find an edge in that market. But if I'm bullish or bearish based on my fundamental indicators, I develop my own fundamental indicators, by the way, then I move to step 2. And then I time the market. What does it mean, timing the market? I place my set, entry, stop loss, target, and then I use my technicals. And for technicals, you can literally use everything. I like to use supply and demand, but you could use price action patterns, whatever your technicals are.
Excellent. We'll get back to fundamentals. Excuse me. I think one of the most important, given how you approach the market, it gives the sense that you do this full time. When you wake up, the first thing you think about, of course, besides your family and your physical health, is what is going to happen today. And I know you said you are a 12-year trader, but 10 years
Full-time,
trading. A lot of traders come in and they say maybe they want to do it full time. Maybe how did you come to the decision to decide to do this full time? Was it that maybe the profit was consistent, or you made a good amount of money that you said it can cover me?
No.
For 6 months, and then
That's a good topic, and I actually quite elaborated on that question in another podcast that we just recorded yesterday.
No
in Financially Incorrect.
Yes.
But just again in a nutshell, so for me it was basically, as you said, I was seeing that consistency in my results, and this is really that's the primary reason why somebody should only decide, hey, I do this full time. If somebody doesn't see consistency in their results, please never go full time, right?
Yeah.
Then it's just a gamble. But otherwise, if you see consistent results, then it's a calculated risk, like in any other business, right? Any other business has some risks involved. If you open a restaurant, there are a lot of risks involved, right? If you open any other physical business, there are a lot of risks involved. In trading, you have basically financial risk as well. But once you see consistency, it's pretty much calculated risk. So this is when I basically decided I go full time, because I had a corporate job and I didn't like my corporate job, to be honest. So it was a good way to ditch my corporate job and go full time trading. So I be basically my own boss and independent and have more freedom to my life.
yeah, I think the naturally know that is being your own boss.
It's actually two things. I think it's being my own boss and having a lot of freedom, not being chained to the desk, having a 9 to 5 job, being chained to the desk, but really having this. You're the decision maker, right?
Now, given you're a full-time trader, I believe the tools you use are very, very important. Yeah. Now, did you first get the 5 screens set up, or did you first understand the platform that works out for you? Because I know there is this fascination, myself included, that at home I have a trading desk whereby if I get home, I know if I get to this laptop, it's purely for trading purposes, and maybe it's my own family office, for example. You have your screen, you have your preferred websites in play, you have maybe your preferred news channel for financial markets. How did you decide, okay, this is the best working for me, that will allow me not only to incorporate education as you're doing, but also make the most out of, on a bigger frame, you're able to see clearly what is happening in the markets, I want to believe.
Yeah, quite interesting. Actually, if you go to my Instagram, and my very first picture that I ever posted on Instagram was back in the days was my trading desk. And it was also 16 to 9 inch LG screens. And I think 1, 2, 3, 4 of them. It was massive.
Yeah.
Did I need to have that? Was it mandatory or useful? Of course not. It was just hey, I'm a trader, I need a lot of screens. But to be honest, one big screen is for a trader more than enough. Everything else is overkill, literally. It's just for show for you. I have so the way how I operate, or we operate, obviously we have a office in Dubai, so I can work from the office as well. But if I trade for myself, I have my home office, and everybody should have their home office, basically their quiet place to do the analysis, to trade. It should not be in the kitchen or in the living room, or just opening up the laptop and then start doing it. No, everybody should have their quiet place.
They normally say sometimes when your strategy is not working well, you have 6 screens to show you how badly you are losing.
I've never heard it, but this is so good. This makes so much sense. Yeah.
So you need, first of all, to get the education bit, make sure at least you have some sustainability and consistency. Yeah. And then when you get the 6 screens, it just elevates at least maybe your view of maybe in the market or something like that.
Yeah, look, it really depends maybe how you trade.
Yeah.
But for me, as what I would consider, right, a swing trader who basically I do my analysis during the weekend, and then this will take me usually an hour or so, or 1.5 hours just for myself doing the analysis, go through all the markets that I trade, and then basically I create my watch list for the week, and then in the week on Monday I might place my orders that are basically pending orders. So everything is pre-planned, everything is done in advance. I I set these trades. That's why I I call my strategy set and forget and get alive, right? Set and forget and get alive, because I pre-plan everything. I set my trades on Monday and then I let it play out throughout the week. So throughout the week, I might come to my desk maybe just for trading purpose. Of course, I come to my desk for other things, but for trading purpose, maybe 15 to 30 minutes a day, right? So that's why I would always say just really everything that more than one big screen is overkill. I have actually, the one that I'm like just really trading from is like 140 inch. It's like a bigger screen because, of course, like the bigger, the more you see, but it's like 40 inch. And then next to it, I have my laptop as like an additional screen, but that's literally it. For me, I don't need more.
Okay. I think maybe I'd like to ask two questions here.
Yes,
do you normally journal your trades? And besides the journaling, do you find maybe, I know in your early stages, I don't know if you used a MetaTrader platform or you just stuck to, because I noticed recently you're using TradeStation or something like that.
Yeah, I can elaborate easily on both questions. So I want to be super honest with the journaling and logging part. So with me personally, now I have 12 years experience, 10 years full-time. I don't do any of that stuff anymore, right? I don't log, I don't journal, because it's so for me, everything is also, I have my rules like ingrained. It's my rules are my DNA. It's everything is basically, I know what I am doing with the experience I have, right? But for the first half of my career, I was logging and journaling, and I'm telling everyone who is starting off, this is mandatory. This is part of the business. This is part of your job of becoming a trader, because only if you log and journal, you can tweak your strategy. You know what you have to improve on. If you don't do that, it's just happy guessing at the end of the day, right? You don't have like the data, the back-tested data where you can then literally improve on. On your second question, what was the second question again?
Platforms.
A platform, yes. No, because I'm now big in prop trading, right? Forex prop trading, and all these prop trading firms, they use MetaTrader, basically MT4 or MT5. So I have quite a lot of prop firms that I'm trading on that are on MT5, right? So for me, my TradeStation, right, is just for my analysis purpose, because my analysis involves futures analysis. So if I trade the US 30, which is the Dow Jones, I analyze the futures, the YM. If I trade gold, XAU, USD in my prop firms, I analyze at GC, which is the futures gold symbol, and so on. So all the markets I analyze in the futures, and then my indicators, my tools are built on TradeStation as well with their coding language. So that's why I use it for analyzing purpose only. But then I just use that analysis and place my orders on MT5.
Excellent. So I guess what I'm trying to drive at is sometimes, there is a preference in platforms.
Yes.
Would it be advisable for, let's say, a beginner or an intermediate trader to, use advanced platforms, or maybe does it really matter at the end of the day in terms of how profitable you are?
For me, it's difficult to answer because I need TradeStation to be successful because of my tools. But let me generalize this a little bit. The platform itself doesn't determine whether you're a good trader or bad trader. What determines whether you're a good trader or bad trader is the skill. And I always tell people, with the skill level, it really doesn't matter where you place your orders on, because you have the skill, right? So for me, literally, the way because I'm trading throughout so many prop firms. I'm trading MT4, DX Trade, what else? Trade Locker. I don't even know the name of all platforms where I execute my trades on. Exactly, C-Trader. I'm using so many platforms where I just execute. It doesn't really matter. If you have the skill, you can execute on all platforms.
Excellent. Now, I think that brings me to the next question. You said you do analysis primarily on futures, and then you overlay them on the CFD or derivative side.
Exactly, on the CFD.
Maybe why like that? Maybe what is the implication of getting the futures pricing and then relaying it now to the CFD side?
I can to simplify that, because obviously what people have to understand, the CFDs, as the name it says, CFD is just an abbreviation, right, for contract of difference. These are just derivatives from an underlying asset. Where's the underlying asset? It's the futures, right? So the futures drives the market, and then the brokers, they create their CFD products, right, for the people to trade on, that you can trade with more leverage, less margin requirement. You can trade then in a Forex market. But the underlying asset where these prices are derived from is the futures. So that's why for me it's really important. And also, well, this would go very much into detail, and I would need to show that on the charts, because the prices, they can differ from futures and CFDs. And since futures are the real thing, I need to analyze the real thing, get the prices from there, the levels from there, the analysis from there. And once I have it from the real thing, I can transfer it to the CFD. That's why it's like super important to understand the futures, the real thing.
Okay, interesting. I'll take a tangent a little bit.
Yes, please.
Just to make it light a bit. Maybe in your experience, I guess you were there during the Brexit saga, you were there during the Trump era, you were there during, I guess, COVID and everything in the market actively.
Of course. Yeah.
Maybe what are some of the common misconceptions you have heard about online Forex trading that maybe you have tried your best to debunk, but you find them still persistent in the market or in the chatter box?
Oh my goodness. There's so many misconceptions. I don't even know where to start. I think
the biggest one.
I think the biggest misconception that is maybe that price is driven by these news events or by these big events that are happening every single week, or even by these what people consider black swan events. Again, I said that during the panel, I don't believe in black swan events. I believe that all these events that take place, they are just like accelerators for the market to move in the direction that the market would have been moved anyway, because everything, basically price moves based on their fundamental values, right? And this can be basically also seen on the chart. You can put them on the chart the way how I look at, and you basically can, quote unquote, know in advance with a very high level of accuracy what is about to happen in the future. But obviously, these events happen, and these events are then accelerators for that price movement in that direction. So I think the biggest misconception is that people focusing way too much on these news events and trying to interpret, like, what did he say? How did he mean that? And blah, 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 blah,
Okay.
blah.
Now, given your 12 years,
Yes.
did you at some point do day trading?
Oh, yes, I started actually day trading. My education, like, when I first started off, I was doing day trading as well. I think.
And scalping?
Well, I was never really do scalping, but I was looking at 2-minute charts as well, just for the sake of, seeing price movement. Of course, everybody goes down that route, right? But I think benefits of day trading. So I want to classify trading. We can classify in maybe 3 categories: scalping, day trading, swing trading, and position trading. We've just put in brackets now, but we have scalping, scalping, day trading, and swing trading. So I don't want to talk about scalping, because I don't believe scalping is, nobody in the world can be consistent in scalping. That's my statement. Can you make money with scalping? Yes. Can you be consistent? No. Can you scale up your capital? No. So there is some big limitations on scalping. So that's why we don't discuss scalping here. Now, day trading, there are some big advantages on day trading. So day trading, I would consider executing on a time frame between 60-minute charts and 4-hour charts. That's what I would consider basically executing on these time frames. Something in between, I would consider day trading. And so it has its benefits, especially if you're a starter, because you get immediate feedback from the market, right? You get like a huge sample size very quickly. And when you start properly logging and trading, you have a nice feedback from the market and you know what to improve, right? So I would recommend, if like, now if like somebody who is completely new to trading, right? And I think this is a really important lesson, and let me elaborate quickly on that. If somebody is really new to trading and now to figure out like what time frame should I trade? Is it like day trading? Is it like swing trading? Don't do scalping, please, right? It's like, it will just end. This will be a catastrophe, right? You will lose, I can guarantee you. Now, but if somebody has to figure out what to trade, I always tell people, look at your day-to-day life. Look at your routine. Do you have a lot of obligations? Do you have less obligations? How does your day look like? If somebody comes to me and says, I have a 9-to-5 job, I get up at 6 in the morning. I drive my kids to school. I be at work at 8. I come back at 6, 7. Then I have to take my kids to bed. I almost have no time for myself. And I maybe want to incorporate like meeting friends and going to the gym and doing something for myself. I tell people, don't start with day trading because you just don't have that time for it, right? So to cut a long story short, you need to look at your day-to-day life if you can incorporate that day trading. For like the younger audience who goes to school and goes to university maybe, and they have all the time in the world and they're sitting bored at home, well, go into day trading because, well, you get the immediate feedback and you have that time. So that's always my feedback.
Interesting. I guess it goes with your demographic, let's say your position in the demography.
Yes, absolutely.
And obviously, at least in the stage of your life that
state of your life where you are, yes.
Yeah, interesting. Now, I believe you also had trading your real money on the side as well. Maybe
right now?
Yes.
No.
No.
I only do prop trading.
Prop trading, yeah. When you are doing it, maybe what are some of the difference between psychology or how you approach even the markets and risk management between, managing funds for others, prop trading, vis-a-vis, of course, real money, your own real capital?
Yes. So since I now manage 4 million in prop firm capital, right? So what in prop trading, right, you have like these prop firms, you have daily drawdown limits and you have max drawdown limits, meaning that if you exceed these drawdown limits, daily and max, they take the money from you. So you lose the account. So you really have to stick to proper trade, like money and risk management. So for me, I'm risking 1% per trade. So that these risk parameters are really important to understand, because if somebody asks me, hey, what can I achieve? What can I accomplish in trading? I usually say, well, for me, 2% a month, it's really good because I risk only, or like this is enough 2% a month because I risk 1% on 4 million of capital. 4%, you can do the math, it's $40,000, and 2% is $80,000, right? So that 2% is like a good chunk of money, right, per month.
And there's no stress.
And it's no stress, exactly. So when it comes to, I think the big difference between prop trading and trading your own money, and prop trading, this is basically when you would also say investor funds in a way, because you're trading the firm's money. Of course, this goes a step further if you trade like money from individuals, but you should handle that the same way. You should not make a difference whether you trade from a firm's money or individual money. The difference is basically that usually what people do is on their own funds, they don't apply proper risk and money management. They take 10% risk, 20% risk. They don't put stop losses, right? They have huge drawdowns. Sometimes you're laughing because you've seen that, right? We've all seen that, right? Admittingly, right? We can all raise our hands, right?
I've seen it a couple of times.
Yes.
And I think it is very hard, of course, given you are it is your money.
Yes.
And to some degree, you are aware that you might lose all of it. So you're like, when you are in a drawdown of almost 60% of it, then, you're basically done. But I find maybe after you have done prop trading, maybe you know the rules. If you have done it, let's say disciplined,
yes,
you can apply it on your live account. And more importantly, you know when to trade and when not to trade. Because at the end of the day, you're trying to scale it from, let's say, $100,000 to $1 million of your own real money, and even higher.
Yeah, that's...
Of course, it requires, for those who have done that, they have done it with a great amount of discipline.
100%.
Yes. I think that is one thing that I wanted to point out.
Yeah, what I want to point out here just quickly is that obviously that trading your own money versus like prop trading is that usually that people are kind of, unfortunately, in the Forex market, that's just the case statistically, are undercapitalized, right? So since you're undercapitalized and maybe you have a $500 account, if you do 1% and it's like $5, right? Like $10, 10% would be like $50, but 1% it's like nothing to that account, right?
Yeah, so you have to raise the percentage.
That's why you have to raise the percentage, and that's why prop trading is so nice, because you can get like a 100K account and then 1% all of a sudden is $1,000, and it makes a huge difference, right? So that's the problem usually. That's why people take too much risk, because they're undercapitalized. They have a small account size, and they're trying to double, triple, quadruple this account, and that's why they're taking way too much risk, from my experience.
Okay. Can we say maybe if you are undercapitalized, maybe instead of the percentage, put a dollar figure on it?
I love that.
Yeah, so that you maintain the same discipline of risk and awareness, but also You have a realistic expectation from the market.
Fixed dollar risk, the fixed dollar risk approach, that is what I'm preaching as well. I love that. Yes, I do that personally. I'm doing prop trading, yes, but I still do apply for myself on these prop accounts kind of a fixed dollar risk approach that I like, rather than just saying 1%. I have an amount in my mind that I like, okay, this is my fixed dollar risk that I like to trade.
Yeah, because
I love that.
Sometimes you may
Makes
have
more
made a
sense.
profit and it's like $4,289, $4,000.
Yeah.
And you're like, what is 1% of it?
Yeah,
But
that's,
if
yeah.
you put
So
the dollar, it's a definite number.
I'm preaching that as well. Yes.
Yeah, interesting. There is something else, I know you touched a bit on it, but maybe I'd like to bring it up. There's this debate. I'm sure you've been partaking in it.
We like to be controversial. Bum, 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 bum.
Yeah. For me, how at least I came up, I was just taught support and resistance, candlestick patterns, market structure. Makes it simpler, no complicated words that you go to the dictionary to come back to. There is smart money concept, there is ICT concept, there is, I think, there are so many named theories. How I view them, how do they apply to my strategy, and not like, now that I've found a silver bullet, I should follow this to the letter. Do you apply the same at least in your mentoring stage, giving names to your strategy, or it's more like, I want to manage my risk, this is the fundamentals, and of course, this is what I expect?
No, let me a little bit generalize this. All these concepts, the problem is, and I'm new to YouTube, right? So let's call it, I'm new to the social media space, right? I only entered the social media space basically last year in March, right? So a little bit more than a year I'm on YouTube. And what I realized during that time is like so many new concepts are popping up. Like, as you said, ICT, well, that's the name of the guy basically, but that ICT has a lot of concepts, right? Like endless amount of concepts. And then you have like something called smart money concept. So all these strategies, concepts, they only exist in the YouTube bubble for some reason. In the real world of trading, where I learned from these old floor traders, right, at Chicago, at New York, these concepts in this way don't exist. So these concepts only exist for some reason on the YouTube in the YouTube bubble. Let me give you an example, like the smart money concept. This is just supply and demand. If somebody came up with took supply and demand and rebranded it for the new kids on the block, basically for the new kids on YouTube, to make it sound more fancy, more reliable, more relevant to them, and use some fancy words like, I don't even like smart money concept, like implying that this has been traded by the smart money, by the professionals, right? Like it sounds fancier than just saying supply and demand, but it's basically a rebranded strategy. So a lot of these strategies, a lot of these concepts are rebranded shelf strategies from the past. It's just like, somebody came up with a nice marketing strategy for the new traders on YouTube. Literally, that's how it is.
I guess to summarize it, you are better off getting good entries in the market if you follow where the price is likely to go, and paying attention maybe to the bigger macro factor or fundamental factor that is underlying or driving the market. I guess
that's I would summarize it. That's how I basically developed my process, right? So I use the fundamentals to get a bias in the market, and then so the fundamentals for me are way more important. The bias in which direction the market goes. If you have the direction right, the timing is maybe 20-30%. It's then based, okay, how much risk to reward I want to get on a particular trade. Market timing can stop you out because maybe you're like having a zone that is too tight, whatever it is. But the market timing is way less important than the fundamentals, the direction. Because if you have the direction right, you can use almost every technical strategy to time the market. That's what I actually, based on my experience. Yeah.
Interesting. I think from that, again, there was recently this conversation whereby somebody said, if you have to come to Twitter, look at somebody's chart pattern, and then go to your MT5 or 4 and execute a trade, you still have a long way to go.
Yes.
How significant, at least I know in your time, maybe social media was not such big influence in trading. How significant perhaps right now is social media to perhaps maybe your sentiment in the trading business? Does it at some point affect you, or you just block out the noise and
Yeah, I would recommend everybody. It's a good question, and I would recommend everyone to block out that noise and not look at social media, because on social media, on one market, you get 10 different trade ideas, right? in all different directions. So this is just confusing you. So everybody has to develop their own set of rules, their own checklist in a way, and just follow that through. If you get influenced by social media trading gurus on Twitter.
He came yesterday,
Yeah, okay.
and I think AMC and GameStop were up almost 100%, and you are like, okay, he hasn't really tweeted anything or issued any significant fundamental information that could drive the stock up, but it is up, but it closed at almost, I think, 78%, and that at least makes a lot of sense in that regard.
At the end of the day, you have to become you have to become consistent, right? How to become consistent if you have an objective set of rules, and your objective set of rules cannot include I'm following XYZ on social media and copy his trades, right?
Maybe psychology.
Yes.
When you have lost or suffered a big loss in the market and everything was going your way, are you a person who, let's say, counts 3 consecutive bad trade ideas? That's time for you to take a circuit breaker, or you're a person who maybe when you suffer loss, you're like, no, I am right. You go again in the same direction. How do you handle big losses, and maybe how do you manage so that you avoid consecutive?
Yeah. So first of all, I don't have big losses. Big losses would imply that you lose more than you basically plan to risk, right?
Full margin, basically.
Yeah, exactly. But if somebody is doing full margin, and this is not a trader, sorry, it's a gambler. So for me, everything is calculated risk. We go back to the fixed dollar risk approach, right? So if I say I want to risk $1,000 per trade, that's the maximum that I can lose, literally, because I have my stop loss placed at that $1,000 and it will hit regardless, right? So that notion of big losses, I don't have in my vocabulary, because for me, it's just calculated risk. I do always go by the fixed dollar risk approach. And if you have big losses, then sorry, then you're not a professional trader, then you're a gambler. How I handle that, the second part was really good of your question that I really liked, is that what happens if you get stopped out? And obviously, it's just statistically, we all get stopped out. It's like part of doing business and trading, right? It's our costs in business. Our losses are costs in doing business. This is how I see it, at least. So if the fundamental values haven't changed on that particular market, I'm planning to get back in, because then I was just wrong on the market timing using my technicals. And technicals are just, sorry for my language, bloody chart patterns, right? That doesn't mean anything if your fundamentals are not right. So if the fundamentals are still the same, I'm trying to get in on a different chart pattern, so to say.
To the next question, fundamentals. We have on the 14th of May, as we record this, PPI dropping, purchasing pricing index, I guess. And we have a couple of inflation data as well.
Yeah.
Plus, for at the end of the year, towards the end of the year, in US elections. Maybe I'll begin with, what are some of the fundamentals you use, at least to make your decisions, or you think, at least according to your strategy,
Yes,
drive your price action? And maybe for the general traders, what would be some of the expectations from the US elections, and of course some of these FOMC?
That's a big question. On that question alone, I could elaborate most probably for 30 minutes, but I try to keep it short. So when it comes to trading equity indices, it's really important to look at what it's called election cycles, right? So the president is getting elected every 4 years. So this 4-year period has an election cycle with 4 subcycles. And every subcycle is obviously 1 year, right? So the first subcycle is election year. And this year we're in the election year because the president is getting elected. Next year is the post-election cycle. The year after is the midterm election cycle. And then it's the pre-election cycle, because then everything repeats again with election cycle, post-election, midterm, and so on. So these 4 cycles are really important, because statistically, if we go back 100, even 140 years in history, the market is moving based on these cycles pretty similarly. So it has like these lows and highs during particular month. And I always say when it comes to the US stock market, US equity indices, the markets are on a predestined path. The market is going to do what it's supposed to do anyway based on these cycles. Do we have sometimes a little bit, higher, bigger drops or prices rallying a little bit faster? Yes, but the cycles, they give us a good idea where the market is going next. So for me, these cycles are really important, and what I expect in during now the election cycle now, it really doesn't matter. So based on the cycle statistics, it doesn't matter who will become president, whether it's going to be Biden or maybe Trump or maybe Dwayne the Rock Johnson. It really doesn't matter. And whether a Democrat or Republican going to win the election, the election cycle, we will end up making new highs. All right, that's based on cycles. And then, by the way, and I said that during the panel as well, during our Titan Summit, that I made a YouTube video where I go through these cycles, explain everything. So everybody who is watching can go on my YouTube channel, look at that video. I made a US 30 whole year roadmap prediction. There's a PDF to download, and they can look at, I pointed out all these swing lows and highs during every single month. So I think this is really valuable for the people to watch. But bottom line, we're going to make new highs at the end of the year. That's my prediction. So cycles, because everything for me that is not based on price, this is fundamentals. Everything that is not derived from price, these are fundamentals for me. So for equity indices, I look heavily at election cycles, but also at interest rates. But there I look at the treasury bonds, at the futures treasury bonds, the 30-year treasury bonds. And this is where I get my valuation from, whether I'm undervalued or overvalued based on the interest rate decision. So just in a nutshell.
Interesting. Yeah, I think forex trading is one of those careers whereby you might start as a basic economist.
Yeah.
You end up being a bond valuer. You end up being a land specialist. You end up being a shipping expert. Okay, what is happening in the Red Sea? Will there be oil transportation? It definitely takes you across basically different places. I have two final questions. I think maybe would be valuable. Number one, given you, of course, you have traveled across the world, spoken to different types of traders, maybe what is the common factor that, of course, all of them have, and maybe is there like a difference between how different regions, based on maybe their upbringing or their society, that you found quite, stark differentials from, Dubai, Europe, Americas, Asia, Africa now? Is there like a big difference and a commonality between them?
Oh, good question. I think a question that I've never been asked before. I've been asked so many questions, similar, but this is, I think, a new question to me. I would say there are no big differences. I think that what I see is like all professional traders that I've met are really disciplined persons, not only in their trading, but in their day-to-day activity. Because I always say, like, we all agree on that as a trader, you have to be disciplined, right? But I also firmly believe is that you cannot be disciplined in trading and during your day-to-day life activities, you are then sloppy, right? It doesn't work that way. You're sloppy like 23 hours a day and then 1 hour a day, you're trying to be disciplined. No, you have to be disciplined. You have to understand that you have to make your bed every single morning, right? This is part of being disciplined in a way. So I've seen with like everyone that is like consistent in the market, they're all disciplined people in their day-to-day activity. That's the most common, I think, what brings us all together.
Yeah, I think the difference will be the size of money they make.
Yeah, of course. But it's always based on living standards, right? I mean, like in Kenya, it's different than in Dubai, and Dubai is different than in Germany different than in Australia. Like, of course, it's based from where you live in, right?
Finally, maybe given now you're doing, I think, 4.1 million in under management.
4 million, yeah.
Yeah. Maybe what are your goals for the next 5 years? That would be both, of course, personally and professionally, at least in this industry.
Yes. So also quite interesting. I'm not a very goal-driven person. I don't have like monetary targets or like materialistic targets. For me, it's like my goals are happiness, satisfaction. And, my goals are, every morning that I'm I'm waking up with a smile and looking forward to the next day. Like these are I have like, for me, it's like I always have like more intrinsic goals. And I feel like all these materialistic goals, they can hinder your trading success because you're running after the money basically, and you're chasing like financial success. And if you're running after the money, you're like greedy or fearful, and this is like having bad emotions in the market. So I realized that my trading got better once I removed that money-centered approach and went more like to the process-oriented approach. And ever since, it's like I'm so chilled and I'm so calm, and I really, and it's just for me following the process. And since I'm following the process, I know the results. Money is just basically in trading. It's very important. I mean, this is like something that we can add at the end now here, that money in trading is just a result. The result of what? Of following a process. So it's just coming from following the process, and then the money will come anyway. So my goals is to remain, disciplined and committed to what I'm doing right now, and everything else you see, like all the quote unquote success that I had so far in terms of prop trading and whatever, like professional success, is just coming then just by default, because this is just a result of me being a disciplined person and being disciplined with my rules. So yeah, this is what I would like to give to the audience. Like, don't be too money focused, because money is just a result of following a process.
I guess that marks a good end to the bullish episode today. Put in the hard work, make the most out of they say education pays the best dividend you can ever get.
Yes.
So definitely
investing in yourself.
Yeah, I hope you have learned something. Perhaps should you have a question, concern, comment, do not hesitate to drop it below on the on social media and the DSPs that this will be airing about. I would like to thank you, Bernd, for honoring us with your presence.
No, thank you for having me. It's my honor.
No problem. I know hopefully we'll have you in the future again. Yes. I've been your host, Jesse. You can follow Bernd on your Twitter. What is your Twitter handle and over social media?
They should all follow me on YouTube, basically. Bernd Skorupinski, right? I think we can definitely mention it in the YouTube, in the description, video description, wherever it's posted. So you will find me for sure.
Other than that, guys, have a wonderful day. Adios.
Thank you.